Welcome back to the show, everybody. We got a great one for you today. XRP could be on its way to $1. We're going to take a look at that. It is above that resistance line that we have fought so long for, and the next resistance line is in front of us now. So we'll get into that. OKX has a big announcement, and if you're on that exchange, it's not good. You're going to want to hear about it. Jack Dorsey's first tweet from Twitter just went for an astronomical price for an NFT. Time Magazine wants in on cryptos, and guess what? And NFTs as well. The Fed, the digital dollar, shaking Wall Street, but two prototypes already exist, and they're going to reveal the results in July. And we got to get into this XRP price business. Let's just roll this beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Good morning. Welcome back to the show. You can follow me on Twitter at @BackupBradleyAbove and everything that we're talking about here. Let's go ahead and get into this. So just coming down here right now to XRP really quickly at 58 cents now. We are 4.5% up on the 24 hour, and we are 22+% on the 7 day. Let's get into the news. So this is a big one from Michael Val. 5 links. OKX Korea Crypto Exchange to shut down as new reporting laws take effect. This is a big deal, everybody. Listen up. If you're on this exchange, they say the OKX Korea will accept withdrawal applications on a 24/7 basis until 6 p.m. local time on April 7th. Okay, that's their local time. So you better figure that out for yourself if you're on it. I would get off of there immediately. Requests for withdrawals will not be honored if they are less than a predetermined minimum amount. So there is your public service announcement right there. Morgan Stanley has dismissed reports linking it to a possible M&A deal for the South Korean market-leading crypto trading platform Bithumb. It is, and says that those allegations are in fact unfounded. So there's actually some other companies that we covered yesterday that are making a bid for the crypto exchange out of South Korea, Bithumb as well. So Morgan Stanley says they are out at the moment. So we'll see how that goes. All right. This is from Bloomberg Crypto. An NFT of Jack Dorsey's first tweet sells for 2.9 million of Ether. Whoa. Come on in. How about that one? And this is a reminder here that, looky here, a new category opening up on unstoppable domains. Doctors.crypto, shop, movies.crypto, mail.crypto, flowers, school, club, attorney.crypto. Shout out to Seal and Jeremy Hogan. Attorney.crypto is available for $25K. Got a link in the description. Lawyers.crypto and legal.crypto. There's so much here. Make sure you check this out. There's another 4.5 hours for most of these until they become available. And then obviously you can see dentist.crypto. There's just so many. Go check them out. There is a lot. There's quite a few that I'm liking here myself. I hope you don't get them before I have a chance to. So here we go from Michael Val. 5 links. This continues the conversation to show you, and I think if you understand Time Magazine and what a staple it has been, then I think you understand what's going on here. Time Magazine seeks a CFO comfortable with Bitcoin and crypto. When I went down into this article, I thought, okay, they just want to have some Bitcoin in their portfolio. Not really the case. According to the job details listed on LinkedIn, Time is seeking a chief financial officer with more than 7 years of experience in executive leadership positions and who has comfort with Bitcoin and cryptocurrencies. Position will be based in the magazine's corporate offices in New York City. The media industry is undergoing a rapid evolution, says the listing. Time is seeking a chief financial officer who can help guide its transformation. Now, one of the things that looks similar to me is back in the dot-com era, you had a bunch of companies, whether they were legacy firms or conventional companies that already existed, that were trying to tie themselves into the dot-com market to get that trend and that upswing into their company. This is similar here, but there is practical application identification. And that's the thing I wanted to point out about this for Time Magazine. The magazine also seems to be more accepting of blockchain recently. Time announced on Monday it would be auctioning 3 non-fungible tokens, digital art pieces inspired by some of its most iconic covers. And Time Magazine, I think we can all agree, has had some iconic covers. And I tell you what, that is going to be interesting to see what those NFTs sell for. The FATF, going to the international level, if you're new here on the channel or to the crypto scene, the FATF is the Financial Action Task Force, which is a regulatory body connected to the G20 and the G7. This is where a lot of what gets crafted for all of us, because the member bodies of that council are countries, and they all collectively come up with a loose guidelines or recommendations framework for countries to adopt and follow and adhere to. One of the most recent things we saw was a year or two ago when the FATF introduced KYC, AML, and CFT, and the travel rule for cryptocurrencies. Here we see another play to go even further, which the libertarian in me, by the way, is screaming, please no. But you know, the guy who's getting ready to be 50 years old next month says, well, this is the way the world turns, so this is what's going to happen probably. FATF cryptocurrency guidance revisions raise privacy concerns. The FATF released new guidance on cryptocurrency regulations and is asking for public commentary, which means they've already made up their mind. Coin Center says the changes would infringe on personal privacy. The guidance has been introduced at a time when authorities are working on regulating the market. And I had a spot highlighted here. Okay. And I want to talk about this right here. So this breaks down the problem with what they want, right? Issues with the new FATF cryptocurrency regulation draft. Again, we have established what happens as far as from the top down. The top down is they come up with these things from either the FSB, the Financial Stability Board, or the FATF connected to G20, and then they push these recommendations out and we see them get adopted or not by the countries. It says here, primarily, Coin Center pointed out 3 issues with the new draft. The first deal with the surveillance obligation for non-custodial entities. With this particular update, the FATF asked virtual asset providers to include those multi-sig minority key holders and various participants in smart contracts and layer 2 mechanisms. Coin Center argues against this surveillance taking place against private persons operating on open computer networks. It then pointed out that the penalties are extreme and that the data collection would affect personal privacy and constitutional rights. The other 2 issues also have to do with privacy. Coin Center classified them as scrutiny against peer-to-peer transactions, privacy technology, and customer counterparty identification. Excuse me. The draft calls for limited support for unregistered entities and exchanges to identify payers and payees for services. The FATF is asking for public comments until April 20th, but I can assure you they've made their mind up. The guidance comes at a time when many national governments are mulling over how to sensibly regulate cryptocurrencies. The responses have been varied. Some have been quite draconian, while others are taking a more measured approach. South Korea has banned privacy coins, while India has considered a total ban. The U.S., meanwhile, is focusing on reviewing assets that may have violated securities laws like Ripple. I think we all know that case is falling apart by the second for the SEC. The practical implementation of these restrictions would be difficult given the decentralized nature of asset class. However, that hasn't stopped governments from stepping in as much as possible. Yeah, that's a true story. That's a true story. So we're going to keep an eye on it, but they're going for more of a privacy grab here, and I don't like it. You know, and that doesn't mean it won't happen. So we should know about it, though. And here is interesting comment here. This is from XRP Crypto, while Federal Reserve's digital dollar push worries Wall Street. Oh, I bet it does. Banks, credit card companies, and digital payment processors, are nervously watching the push to create an electronic alternative to paper bills, or what some call a digital dollar or Fedcoin. Well, First of all, I can tell you, I bet Wall Street and some of these other companies are nervous because, look, it's either one of two things. Either the company is not well with its books and its liquidity cash flows, and they need the 2 to 3 day swing on transactions being settled because they're in a Peter to pay Paul situation. Or, it's a situation where, it comes down to, the customer doesn't have the money, their business model has late fees, and if you're using digital dollars and you don't have any, you can't buy whatever the thing is, and henceforth you can't get hit with a late fee later because you don't have the digital dollars, so you never got it to begin with. You see what I'm saying? So some of these business models are structured in a way that allow them to work with a float that they really don't have, or you're talking about really disrupting a late fee model that you're not going to have any problem with a digital dollar, because if you don't have it, you're not getting it. Right? There it is. And here we see massive news about this Fed dollar, Fedcoin, Fed targeting July release for the results on the digital dollar. Let's get into this because it is a big deal. And by the way, don't forget, we're about to talk about XRP going to $1. Hang in there. So this here really says researchers at Boston Fed and MIT have created at least 2 prototype platforms for a digital dollar. Check this out. The Federal Reserve, Boston, MIT could reveal their digital dollar research as soon as July. Researchers have developed at least 2 prototype platforms that allow users to store and move digital currencies. I'm not going to read this whole thing to you, but I do want to come down here. Last week, the Federal Reserve Chairman Jerome Powell said that a potential digital dollar can coexist with traditional cash if it's regulated accordingly, citing a recent Bank for International Settlements report. One of the 3 key principles highlighted in the report is that a CBDC needs to coexist with cash and other types of money in a flexible and innovative payment system, Powell said. Meanwhile, major payment companies such as Visa, MasterCard are already looking to add support for potential CBDCs to their platforms, which is an important thing to note. We're going to get into that in a second. We're increasingly having conversations with central banks as they think about designing potential central bank digital currency, which are CBDCs, and we are talking to them about how they think about design, said Oliver Jenkyn, president of Visa North America, earlier this month, adding, so there's a lot of talking, but there's actually a lot of action alongside it as well. This is a big deal when you see Visa and MasterCard working in tandem with the central banks on their CBDCs. Why is that, Brad? Well, I'm glad you asked. It's a big deal because the MasterCard and Visas of the world are like a huge catch-all bucket. Remember when Visa applied for a patent to be able to repatriate the paper dollar to a digital one? If they are working, in fact, hand in hand with the central banks, one would speculate, because it appears that you have a system set up that is working with the central banks, because Visa did not create the dollar, so they don't have a patent to control how they repatriate it. But if they were to get the permission from the government and the Treasury, they could be a part of the repatriation process. And as people pay dollars and make dollars and things come in, they could work with the central banks to control the ratio of digital dollars versus paper dollars, like a catch-all bucket. I think that's a pretty interesting combination between them, and that is something we covered months and months ago about Visa pushing for a patent to repatriate paper dollars to digital for the government. Okay, so here's a reminder. We're getting into price here, and this is coming from Secrets of Crypto. And I like this one. I said, yep, hashtag relist XRP, and I suggest everybody keep using hashtag relist XRP. That SEC case is a mess, and Ripple just keeps on shining. Crypto is going to be responsible for more sudden wealth syndrome than any other asset in history. I don't think I don't think that's off base. I think that's spot on. In fact, I really do believe that. And this is not financial advice, and everybody's got to make their own decision for themselves. But there is an article out, and like I said, a lot of technical analysts in this space look at the TA stuff. And when I start to see all of them lining up and the tea leaves coming together, I say to myself, we better take a look at this. And before we do, let's take a look at the price and we'll get into the article. So again, we are up from 47 cent to 57 cent. 47 cent was a huge resistance level for XRP. It has blown through that. And what is the good news is beyond the 57 cent is we are now ranging between 54 and 59 cent. We have not pulled back to that 47 or below mark. So that does suggest that we are seeing enough support here to go ahead and have this conversation about what may be coming. XRP price has been tapping the supply barrier of 62 cents, which is our next point of resistance here, for more than 3 months, but has failed to breach it each time. During this period, Ripple has formed an inverse head and shoulders pattern. We're going to look at that in a second. This setup contains two valleys on the extremes of roughly the same height, known as the shoulders, and with the middle one being the deepest, called the head. As the name suggests, the pattern is an inversion of the head and shoulders pattern, and the setup for forecast of 72% upswing determined by measuring the distance between the head's deepest part of the neckline at 62 cents. This target places the XRP price at $1.08. The Ripple versus SEC case will play a pivotal role in determining the breakout for the aforementioned technical formation. The recent news has pushed the XRP price by more than 25%. Another positive development could be enough to send the remittance token through the neckline at 62 cents. And that's where we're looking at next, the 62 cent mark. Here is, in fact, the shoulder, the inverse head and shoulders, the head, and then the other shoulder. And what we're talking about here is being able to get enough support to maybe pull back and then shoot through. We may test that. It may pull back and then really get the what it needs. The other thing to pay attention to is down here at the bottom, is to pay attention to whether we are overbought. For green, you know there's a lot of buying. Like there's a lot of buying back here. You saw it. And then we saw a huge sell-off. The volume really came in. Look at this volume. This volume is nothing compared to what we have seen, right? So if we could see that volume begin to, the buyers win on that volume, we could see it actually test that 62. And again, it may test it, pull back, and hopefully we see it go ahead and breach it and stay above it as we have so far with the 47 mark. There you go. XRP $1 would not hurt my feelings, or $1.08 to be exact. And we'll keep an eye on it. That's going to do it for me. That's your news for today. Make sure you check out I Trust Capital, the best gold, crypto, silver IRA on the planet. Make sure you check that out, and I'll catch all of you on the next one.